Hey guys, welcome back to another video. Today we'll be taking a look at Best Buy. So as always, I want to start off with the P/E ratio. So it's currently at a 9.84, which is great to see as it's an indicator of it being very undervalued. I also want to check out their dividend yield. So it's currently at a 2.76, which equates to about 70 cents per share, which isn't too bad. It's always nice to see a company give back to its investors, even if it's a little bit. Before we look at their income statement, I want to see what their gross margin and return on invested capital is. Right now, the gross margin's at 22%, which is good because the lowest you want this number to be is 20%. Then with the return on invested capital, it's good at 24% as you want this to be at 7% and above. Getting into the income statement now, we're going to start off with the revenue. So, as in the most recent year, they're bringing in 47 billion, which is up roughly 8 billion from 5 years ago. So this is great to see. I always love to see nice consistent growth every year with this. So now with the net income, we're going to see how they're growing this. So it's growing well, but they did have a dip in 2018 that I'm not too worried about since they did come back the next 3 years and have been killing it. So the last thing to look at on the income statement is the shares outstanding. So the more this goes up, the less your shares are worth. As you can see, it's looking amazing. They have been decreasing this every year and are now down 67 million from 5 years ago. Moving into the balance sheet now, we're going to start off with the current assets. So the current asset growth looks good as they brought this up to 12.54 billion, which is an increase of 19% from 5 years ago. Now, when looking at their current liabilities, as of 2021, they're at 10.52 billion. So this is also really good to see as they have 5 billion more current assets than current liabilities. The last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest in future growth, or pay dividends. So this is clearly something you need to be improved on year after year. As you can see, it's looking amazing. Again, they did have a dip in 2018, as you can see right here, but it doesn't mean anything to me because the next 3 years they've been doing so well. In conclusion, after looking at the company's financials, it's probably one of my favorites right now. I think it's undervalued and worth somewhere in the $130 range at minimum. So two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.